Hey everyone, I'm Matt here with Down to Trade. It's Wednesday, March 8th, 2023. Now, today I had the absolute pleasure of interviewing with a very well known trader in the Discord world. Now, you've probably heard the name Halcyon Trader several times if you've watched YouTube videos on options trading. Well, back in early January, I had the pleasure of meeting with Halcyon Trader when he signed up for the Down to Trade room. And I quickly realized and recognized that he was a highly efficient trader with a lot to offer the world of options trading. And we're certainly glad to have him with us every day in the Down to Trade room. Approximately 1 month ago, he began to urge me to conduct an interview with him, and he related to me his desire to ask me a series of questions regarding zero DTE trading. Now, obviously, I was immediately enthusiastic about the interview, and we got it scheduled right away. Now, needless to say, there was a lot to cover. We made every attempt to discuss several aspects, key aspects of the strategy. And although we could probably have talked for 20 plus hours, we did our best to consolidate as much information as possible into this short series. Now, this first video is part one of a three-part interview series. Parts 2 and 3 will be released in the next couple days. Now, if you haven't done so already, I highly encourage you to subscribe to our channel and hit the notification bell as well. That way you can be notified when the rest of the interview is released. So, without further ado, let's get down to trading.
All right, everyone. Welcome back. This is a internal Halcyon Club special interview. I will say breaking special interview. So we got Met Camden on the line here with us, and wanted to talk through and bring who I think are absolutely excellent. In fact, I have a little shirt for the goats, who are some goats at what they do, and I wanted to bring that to everybody else here to have an opportunity to pick the brain and listen in on a conversation that he and I are going to have as it relates to all things zero DTE at this point in time, and just the way that he is structured, what he's come up with, how he executes his training plan, his strategy, his setups, his philosophy on all of this. And I'm a firm believer in we know we don't know everything, and you want to find some, when you find people who are really, really good at something, you want to dig into with them and learn as much as you can. So Met has an interesting background and history of how he got to this place. I'm going to do a really quick highlight on this, and then Met, if you feel like you want to fill in some of the details that I'm going to miss, because I'm straight up stealing right from your website,
Okay.
please feel free to do so. So Met's
Absolutely.
background is in the world of, he was in military at one point, moved out of military into civilian life, came into running a business, math, physics, things of that nature were always elements of his background, his interests. Went to school for some of those items, and then eventually started a company. Went through the craziness of 08, 09, and I don't know if you guys remember all that, but I'm sure you do. It was literally in most any business, that was extremely challenging times of maintaining that and growing those things. Eventually got into becoming a police officer and worked for California Highway Patrol, which I'm sure there's a lot of interesting stories just on that alone. Eventually retired from that and started becoming a full-time trader, and then really found his niche in the zero DTE world. And obviously it really took off once we got to being able to do it every single day back in May of last year. But prior to that, as many people experienced, 2020, 2021 was an interesting year for trading in general, for a lot of newer traders coming in. I know many of you were newer traders coming in at that point, not everybody, but certainly a number of you. So Matt, I'm curious, when you were in your regular professional life prior to getting into the zero DTE trading, what was the vehicles, or what was your kind of first introduction into trading or investing or anything in between the lines of that? Where did you initially hop on this whole world of growing money digitally, so to speak?
Okay, well, first off, a quick thank you, and I'm very happy to be here. It was a great introduction. One point of clarity, though. I actually did not retire from the California Highway Patrol. I just left. I only did 11
Oh,
years with the CHP, and so it wasn't a retirement. I just left the department. Although I loved it, it was just time for me to go. But as far as my introduction, so as you stated, after I left after I got back from Iraq, and I left the Marine Corps, and I opened up a business, a telecom business. We did fairly well for several years, and during the great financial crisis, as you stated, I had to close doors. And at that time, looking for a little bit of security with a young baby on the way, I decided to join the CHP.
Yep.
Now, um, as I joined the CHP, I began my entry into, as you say, the digital financial world, in the world of Forex, foreign currency exchange. I did so because at the time I did not have the minimum requirement of $25,000 per the SEC's or the FINRA's rule for the pattern day trading. So I decided to jump into Forex initially, and I did it in kind of the same way most retail traders do. I bought a bunch of books and
Yep.
watched a bunch of videos, and I was in a constant search for that ever elusive perfect strategy.
Sure.
And I did that for a number of years. Obviously part time, while I continued to continue my duties as a police officer.
Sure.
Um, I, Eventually I got out of Forex and into stocks, and later in years, I got into options trading, and now I almost exclusively do nothing but options trading, just because I see the vast benefits of options trading.
Sure.
So that's kind of the 10,000-foot view of my progression through the finance world. I never worked for any hedge fund. I've never worked on the trade floor of the stock of the exchange or anything like that. I'm just a regular Joe Schmo guy who was able to use my mathematical background as an advantage for further analysis into a strategy that has worked wonders ever since I began it.
Awesome. So I'm always curious because you just talked about you're a regular dude, right? And I think everybody here is just regular dudes
Right.
who, have all gone through the trials and tribulations and still working through trials and tribulations of what it means to become a consistently profitable trader. Was there a time for you where you had kind of the aha moment, where you were like, bump my head against the wall, hit my head against the wall, because I think everybody's gone through some point where you make some money for a while and you have a big drawdown, and you make some money for a while and you have a drawdown, and you just kind of keep this kind of zigzagging. Hopefully you're staying slightly above, positive during that time as you're learning this. Was there ever something that kind of things clicked and you were like, somebody cleaned the windshield, so to speak, and it was like this whole new way of viewing things? Or how did you eventually arrive on what you're doing specifically now?
Okay, so well, first off, there's been quite a few aha moments for me. One was the realization that pursuit of like I said, the ever elusive strategy, the perfect strategy, the pursuit of that was ill-informed. I had this idea, as many traders do, that if I can just find the right strategy, I'll be successful. And so I went down this rabbit hole of, okay, well, I just watched this great video, or I just read this great book, and hey, this guy on the internet tells me that if I just trade this strategy using the 821 EMA cross, I can make a lot of money. So I would try that for a little while using
Yeah,
small
baby.
positions, and we've all been down this road where you start making a little bit of money, so you increase your position size, and then you lose big, and you go
Yeah.
back to YouTube land, and you find out that, hey, I shouldn't have been using the 821 EMA cross. I should be using the 1320 EMA
Yeah.
cross. So you try that, and same thing happens, and then you go back, and now it's Bollinger Bands. Bollinger Bands are now the perfect strategy, and you try that, and you try oscillators. You try 15, 20 different strategies, and you learn a lot. I mean, don't get me wrong, you learn a lot of great strategies and different ways to look at the market. But what I found is, this hopping back and forth between different strategies, I I, I was never profitable. Some of them I lost money, some of them I gained money, some of them I was just broke even,
Hmm.
as I traded them. And the big aha moment came when I realized, as every successful trader has realized at some point, the realization was that the strategy really doesn't matter. It doesn't matter what your entry strategy is. What matters is three things. It's your trade management, your emotional management, and there's one other thing I'm forgetting, but essentially how you manage the trade and how you manage your emotions are more important than the actual the entry strategy. In fact, I often say that if I were to find a successful trader, someone who knows how to manage their emotions and knows how to manage their trade, if you find a successful trader like that, I can ask them to pick a strategy out of a hat and have them trade only that strategy for a month or two, and they're going to be successful, because it's not the strategy that matters. It's the management and managing your fear, greed, and ego. If you can learn how to do that, um, that's really the biggest aha moment I've had. Um, I've had several other ones as well. For instance, um, again, I take a math-based approach to my strategies,
Yeah.
and I'm really big on knowing your expected return. Now, part of knowing your expected return is knowing your risk and your reward, what we call the risk reward profile or ratio. Now, I used to have a very set risk, but I never had a set reward. And the problem with that is, if you don't have a set reward, and for me, it was the way this translated into my trading was, for instance, with my zero DT, I would have a max that I could lose, a set risk that I could lose was 3%. But on the reward side, I didn't have a cap. In other words, I would, so if I got to 2%, I would still keep trying to grow more and more and more and more. And eventually what happened was, I realized that not having a set reward, one, it doesn't define a risk reward profile. If you don't have a set reward and a set risk, you can't have an actual risk reward profile, which means you can't
Mhm.
have an expected return. But also, is more often than not, I would go from a 2% profitable day, everything's fantastic, I love the day, to dropping down into the red. And it's like, why did I do that? And that was happening more often than it should have. And so the other probably biggest aha moment I had was when I defined my reward. And for a while, that reward was 1.5% versus my 3% risk. So I would risk 3% in order to make 1.5%. Now, obviously, it has as the market climate has shifted, we've made changes, and we've adjusted our strategy along with it. And now you realize that my set profit is actually lowered down to 1% recently, and that's only because of increased volatility that we've seen in the market over the last 6, 7, 8 months. But those are probably my two biggest aha moments. Is, again, don't chase a strategy. Strategies don't matter. Uh, Learn how to manage your trade and manage your emotions, and that's a big proponent, or a big component of what I try to teach in our room, in the Down to Trade room, is how to manage the trade and manage yourself. And again, the other one that we push is, have once you hit your goal, you've got to be done for the day. We really,
Mhm.
we and it and I also push on that front. I also push the idea of what we call exposure therapy. If you're having trouble staying out of the market, so once you reach your goal, if you're having trouble staying out of the market, in other words, if you feel this absolute gigantic urge to get back into a trade, which I dealt with as well. I mean, we all deal with that. I would make myself watch the charts while sitting on my hands. I mean, physically sitting on my hands. And even though I've already reached my goal, I know per my rules I can't take any more trades. I would actually physically sit on my hands and make myself watch the market for the rest of the day, just to kind of desensitize me to this urge of trying to get back in and make more money. And so there are
Totally hear you on
several
that.
other aha moments, but those are probably my
Yeah.
biggest two.
I'll say that from one of the things we talk a lot about in our group here is to piggyback on to some of the things you're saying, because I think that's just needs to be reinforced and said again, which is, when if you walk into trading and you don't know your setup, you don't know your risk or your reward, and you don't have an idea of how to manage either end of that spectrum, you are destined to lose money, right? That is
It's
guaranteed to
mathematical
happen.
certainty.
You will lose money every single time. It may not immediately happen. You may hit the perfect period of time in 2021 where everything just went up and your strategy was just a always bullish strategy, but it will eventually catch up to you when you have one of those things as a wobbly wheel, or all of them are wobbly wheels in your setup. And so we talk a lot about an aspect where we call it situational awareness, which is being aware of the influencing factors that are driving the market from day to day. Now, it's less about a zero DTE influencing factor and a little bit about a little tiny bit longer time frame, because I think zero DTE in its own world has its own kind of set of psychological parameters that it works within that is a little different than, say, looking at 1, 2, 3, 5, 7, 30 days down the road type of stuff.
Correct.
So we always talk a lot about that, being aware of your situational awareness and then knowing in and out the components of what your setup is. Because I firmly believe you can literally teach anybody to trade as long as you just say, all you got to do is be mechanical and follow this particular setup along the way. And this is the in, this is the out, this is the management, this is the reward, XYZ. And the only thing that ever screws people up is their inability to control their emotions as to when they
100%.
get in or don't get in. And I can tell you from multiple times, my worst, not worst, but I would say disproportionately, my worst losses always come in the zero DTE world from my side of things. And almost always they're because I want to do another trade, or I want to add on a second or a third trade. Almost always it's that third trade where I dip back in because I'm following my trend down and it reverses on you, right? And so I think that's an interesting concept that doesn't get talked much about is I have a reward cap. Once I hit my reward, then I'm done for the day with the zero DTE side of things. I don't need to keep adding in trades, because to me, what likely happens is every additional trade you go in is just slowly ratcheting up this like intangible risk that's showing up as you're on a little bit closer to the money and a little bit closer to the money, so you can get premium, right? Because the premium is disappearing quickly on you. I think, again, so for you guys listening to that, that's a really interesting idea with the way that you work this out. And also, one thing to just clarify, when Amet's talking about 1% or 3%, this is not the return on the capital being invested in the actual account. This is his entire account is at 1%. So you hear a lot of people who do the play with the math game of, I'm doing a spread and I'm going to return 20% on this spread. But in reality, it's like they're making 0.1% overall on their entire account. Who gives a crap? I mean, sounds nice to say you made 20% on a spread, but if it didn't return much of anything in the actual account, it doesn't really matter. So as he's going back and forth and talking about these things, he's talking about his entire account going up by a percent during this.
Yeah,
so
the return I speak about is called the rate of return, and it's your profit divided by the account size, the account balance. Versus, like you said, the ROI, or the return on investment. That's and most gurus, that's what they claim, and I would love to be able to claim that, but it's just not. It's a little bit disingenuous, to claim the ROI, because, like you said, I
mean,
think
it
my
sounds
return
nice, it's
rate.
glitzy, right? It sounds
It
nice to say I
sounds
got
great,
20% or 40% on return on this particular
right?
investment, but at the end of the day,
Well,
the
like, for
goal is to
instance,
grow your account, right? It's growing
right.
your
Like,
entire
for
account.
instance, so far this year, my rate of return for the year is 18%. It's just over 18. And what I'm saying is that's 18. I've increased my account balance from January 1st to now by 18%. So if let's say I started out with $100,000, right now I would have $118,000 in there. But ROI, I'm probably closer to about 70%. If as of right now, I think last time I looked, I'm probably close to 60 or 70% ROI. Now, I don't feel the ROI is a fair measure. And ROI is fantastic if you're comparing two different strategies or two different investments, but it's not a true. I don't think it's a fair measure of how the performance of one strategy, which is why I personally tell people what my rate of return is, because I think that's the truest measure of your one strategy.
And that is, just to also let you guys know, that is 18%, or of the 18% is net of fees too. This is not gross of commissions and fees. That's net of all of that. So that is
Correct.
factoring in all of those pieces,
Yes.
which is, again, you hear a lot of people talk about this, but they never talk about the commissions. Like they'll talk about getting into a super complex, 50 contract, multiple calendar in style trade. And that cost to do that thing is crazy expensive, but they don't talk about that. All right. So let's begin a little bit of the meat and potatoes of the 0 DTE for you
Okay.
specifically on how you do this. So you call it the phallic strategy, right? And
Mhm.
talk a little about what exactly is that? And then
Okay.
how did you arrive at that? For those who don't know, which most of you don't know, it's very math based, the way everything is set up and calculated. But I'm going to let you dig in a little bit how you came up with that strategy, and if you kind of talk about the general concept of what's involved with doing that for your 0 DTE setups.
Okay. Now, obviously, I'm not going to get in, take a deep dive into any of the math because that's just boring. But so essentially, what it is, um, I began this hypothesis back in 2021. Um, Actually, no, I take that back. I began this hypothesis in 2020, and I spent months and months and months, probably 6, 7, 8 months, back testing several different assets, including the SPX, the Dow, the Russell, NASDAQ. And obviously, I did this in order to take advantage of, I don't know if you want to get into the 1256 IRS rule or section, but
We'll bookmark that when we
yeah,
talk about that at the end. I'm going to put
exactly.
that
We could talk
at
about
the
that
end. Yeah.
later. But I focus on indices for a tax advantage reason.
Sure.
And this was back when nobody, and I mean nobody, was talking about 0 DTE. There wasn't, um, to my knowledge, there was nobody on the internet talking about 0 DTE. Anyways, I began to kind of go down this rabbit hole of back testing different ideas of how we can possibly take advantage of this increased gamma and increased theta decay. Um, in with 0 DT trades. Now, again, I tried several different indices and I narrowed it down on SPX because SPX was, in my personal opinion, based on my analysis, the Russell, the Dow, the Nasdaq, they all have varying degrees of volatility and premiums.
Hmm.
And I found that SPX was just the perfect balance, the best balance of those indices when it came to, um, like I said, the good premiums with very little volatility, relatively little volatility. So I landed on SPX, but I hadn't made any trades yet. All of my ideas and all of my parameters for these types of trades were all theoretical. And then I began to see one or two gurus appear on the YouTube world, who began speaking about 0 DT trades, and I would watch them, and there were some things I agreed with, some things I did not agree with. There were aspects that I thought, hey, that's a great idea. Let me pull a little bit from that. That's definitely not a good idea. And so, like I said, I was able, the one or two people I did find on the internet that did finally begin to trade 0 DT, or at least talk about 0 DTE on the internet. I was able to pull some good information from there. Then in February of 2021, I left the California Highway Patrol. And at the time, I was not trading any 0 DT. At that time, again, um, it was only my regular swing trades that I was still doing. I left the CHP, and in February 28th of 2021, and in March and April, first 2 months, right out of the gate, on my own as a full-time trader, I was in the red, and I felt like the biggest idiot. It was
Yeah. What have I
just a
done? Yeah.
horrible, gutless feeling. Like, what did I do? I just walked away from a six-figure income, walked away from a pension, medical benefits, walked away from all of that, and here I am. The first 2 months, I'm in the red. What did I just do? Is just a horrible, gutless feeling. And then so in May, I decided, okay, it's time to put this theory all to the test. So what I did was I made a big leap of faith, and I set aside every other trade strategy that I have, every single one. I didn't trade anything else. And I just put all of my money I put my money where my mouth was. And I began solely trading my theoretical hypotheses on 0 DTE. And in all sincerity, I haven't looked back since. I've every single month since then has been in the green. Every quarter since then has been double-digit returns. And again, it's that rate of return, not just ROI.
Yep.
It's I haven't looked back since. Some months have been easier than others. Some months, uh, I've had great returns. Some months I just was barely above break even. But the fact is, it's worked. The hypothesis has worked. Now, obviously, I've adjusted the strategy as time has gone on. Um, I've I've adjusted it because of, as we talk about, shifts in the market climate. If you're not, how can I say this? If you're always going to have the same strategy, you're eventually going to lose on that strategy, not because the strategy was bad, but because the climate is going to shift in the background, and that strategy is no longer going to work in the new climate. So I've been able to, we have a system in place that Joe, you and I have discussed in the past. I have a system in place where um, I'm able to recognize those shifts in the market
Yep.
early on, and that has allowed me to make those adjustments that we've discussed. And that has allowed me to continue to be profitable, whereas so many other zero DTE traders just stuck with their original. They were doing great at the beginning, and they were doing fantastic. They were making profits every single day, and then all of a sudden, suddenly their strategy stopped working. And it's, in my personal opinion, it's because the market shifted and they didn't know how to properly adjust their strategy. But luckily we've been able to make those adjustments along the way, and we've remained profitable this entire time.
So if we
So
we peel back a layer on this,
please.
what's your strike width you prefer going with?
So this actually, I went back and forth about this for quite a while. And again, through a historical analysis, and then followed up by 8 or 9 months of real world analysis. When I say real world, I mean live trades.
Yeah.
So from May to almost the end of 2021, I was making live trades with zero DTE, and I narrowed it down to 30-point strike width on the SPX. There are several key reasons for that, but the easiest way for me to explain it, I don't know, do you want an
Yeah,
explanation
yeah,
of
I'd
why?
love to hear
Okay.
like how you arrived at that, because I think there's an interesting debate that
Mhm.
goes on with, I would say around 2021 is when you start hearing, I forget what her last name is, Tammy something else. I know Tammy
Chambliss, I believe. Don't quote me on that, by Chambliss or something like that.
something like that. Yeah, I think she was one of the first people I ever heard who was doing like the 50 wide type deal, and
Yes.
then she kind of honed down to 25 wide, and she was in 40 wide. I don't know where she landed eventually officially at, but somewhere in the 20 to 40 wide I think is where she normally was, mostly doing iron condors and not nearly the same level of I would say uh the intraday reading of the tape that you do
Right.
is a very I mean, it's a skill set. Let's just be honest. A very, very it's a skill set that you've learned and honed, which we can get into in a minute here, or I'll say neither at the end. We'll maybe have you pull up your trading view and talk through some of the stuff you've looked at in
Okay.
the past, on how you do this. But so you landed on 30 wide. Was there any major influence from, say, other traders that you're aware of that is how you got to that? Or was it just purely you worked the math out and said, mathematically, from a risk reward perspective and getting enough credit that I need to take the risk I want for the reward I want, this is how I landed on 30 Y? Was there any other factors involved? Or I'm sure there was probably multiple factors, but
Well, yeah, multiple factors, absolutely. So when I first again began building my hypotheses, it was, I personally landed between 25 and 30, and that 25 and 30 is based on an analysis of, well, so there's two things in play when we're talking about your strike width. So we have theta decay, and we have the buying power effect. Now, as we all know, the wider your strike width, the bigger your buying power effect. And but also, the wider your strike width, the faster theta actually decays. In other words, let's compare a 5 wide strike width versus a 50 wide strike width. Now,
mhm.
a 5 wide strike width, uh, yeah, it's very small, relatively small buying power effect. However, your theta decay is much slower than, let's say, a 50 point strike width.
Sure.
Now 50-point strike width, the buying power effect is huge, but theta decay is actually much faster, and it actually behaves much closer to what we would call a naked option.
Yep.
Naked option, let's face it, that's the fastest theta decay you're theoretically going to get, but it also has the biggest possible buying power effect. So there's a balance somewhere between a 5 white strike width and a naked option, where you'll get the best cost for the I'm sorry, the best benefit for the cost. In other words, where does you finally cross over to where the pros outweigh the cons? And what I found through my analysis was between 25 and 30 point strike width. A little bit later on, I saw Tammy's videos and she was saying 50. And I mean, that made me think, am I wrong? Like
Yeah, I missed something.
my
Yeah.
analysis was a little bit incorrect. Um, so what I decided, I went back through it again. And again, I was very, very convinced, based on my analyses, that 25 to 30 points was the most beneficial or most efficient strike width, where you're reaping the rewards of the theta decay while not having to pay as much out in your, or I'm sorry, not having such a big buying power effect. Um, because once you start going beyond 25 or 30, the benefits of theta decay begin to decrease relative to the increase in buying power effect. And so you're getting, as you go beyond 25 and 30, the benefits start decreasing to the point where it's no longer worth that benefit, the added benefit. And so again, my cutoff was 25, 30. So I was actually going to call it at 25 points, but Tammy actually made me reconsider a little bit. So I said, okay, I will increase it. And I stuck with 30, and
Sure.
it's worked out perfect. So there
Okay.
was a little bit of influence there, insofar that she made me increase it by about a nickel. Okay, so that's the end of part one. I encourage you to watch out for parts 2 and 3 of the interview as we continue to dive headfirst into several key aspects of zero DTE trading. As always, if you do have any questions about the Down to Trade Room, please visit us at downtotrade.com or check out our Discord channel. I'll leave a link for each in the description below. Now, right now, we're offering a no-risk 1-week free trial for our Down to Trade Room, which includes several fantastic perks. And not only that, we're currently offering a gigantic discount for the membership. So come check us out. Well, that's it for now. I can't wait to see you all in the room. Take care, everyone. Happy trading.